All Dogecoin and crypto holders are worried about the rising inflation. In this video, we'll discuss everything that has happened in the crypto and stock markets since the U.S. Bureau of Labor Statistics issued fresh CPI statistics for June 2022. We'll first look at JPMorgan's new research on Bitcoin and how low it may fall. And we'll discuss what U.S. Treasury Secretary Janet Yellen expects the Federal Reserve and Jerome Powell to do with interest rates. First, let's talk about Janet Yellen's statements. She recently stated that inflation is too high. This is, of course, self-evident. We all know this, but the main point she made in this interview was that she stated unequivocally that they will totally support and back whatsoever Jerome Powell and the Federal Reserve need to do to get inflation down. Whether it be raise interest rates at a quicker pace or whatever they need to do, they will totally back it. Now, this is a bit problematic since higher interest rates are never good for the stock market or crypto investors. It is not a good sign if interest rates continue to climb at a higher rate than was previously projected. This is causing financial markets to fall even lower. We had earlier observed that they were expecting a rate rise of 50 to 75 basis points for the July 2022 Fed meeting, but according to recent updates, there is now an 83.3% likelihood of a 75 to 100 basis point rate rise. Previously, everyone expected 50, potentially 75 basis points, but it now appears far more possible that the Federal Reserve will take more dramatic actions, such as a 75 or 100 basis point rate rise, which will continue to drive down markets. The next thing we need to discuss is what happened with crypto lenders like Celsius. While interest rates and inflation are not looking good there, we have some more bad news with Celsius because they officially filed for Chapter 11 bankruptcy, and they said that they currently have $167 million in cash to support operations in the meantime. However, if you had any money in Celsius, it appears that your chances of ever withdrawing your assets have diminished much further. Celsius claims to have over 100,000 unaccredited persons to repay, implying that they have over 100,000 creditors. They have hundreds of millions of dollars owed to a variety of people, whether or not they are consumers. We can see that their highest unsecured claim is for $81 million from the Cayman Islands-based Pharaoh's Fund. They also owe a lot of money to individuals. And so if you use Celsius, while they had already suspended and blocked all withdrawals, it appears that getting funds back will be a very long road at this point. This chaos is further going to hinder the crypto market as people have lost confidence in a number of projects and will continue to see more bankruptcies roll out as markets continue to struggle. The second thing we need to discuss here is JPMorgan's new statements on the future of Bitcoin. The investment banking company just announced that the cost of Bitcoin manufacturing has decreased from $24,000 per coin at the start of the year to $13,000 per coin. In the report, they attributed a lot of this to rising energy prices, which are totally due to electric use. So, according to a new study from the Cambridge Bitcoin Power Consumption Index, the cost of creating one Bitcoin has decreased since electricity usage has decreased. They claim that individuals will eventually deploy more efficient mining machines. They are attempting to become more energy efficient, but we are also finding that total energy use for Bitcoin mining has decreased as prices have decreased, implying that fewer people are mining. That is why JPMorgan claimed to have witnessed the production cost of one Bitcoin flaw. Now, it is encouraging to see that creating one Bitcoin is less expensive than it was previously. That's fantastic for making institutions more energy efficient. But there's one thing to be concerned about in this situation. Many people often interpret this decrease in production cost as a signal of where the market's bottom may be. When we look at where Bitcoin is being generated and at what cost, we notice that historically that has worked as a bottom price for a bear market. So right now, because that number has dropped so much, many people say that Bitcoin may go as low as $13,000 per coin, which is the price at which it is currently being mined. So keep an eye out for it. Next up, we have some positive news for you. We've seen a bunch of fresh stories coming from Disney and GameStop that are fairly favorable for crypto. The first point we need to discuss is that Polygon was the first to be chosen for Disney's Accelerator program. This initiative includes 6 other startups. However, Polygon is the only totally blockchain-based company that was chosen. There are two more companies working on NFT platforms, social media combined with NFTs. But it's great to see that Disney, being one of the world's largest corporations, they have billions of dollars spread throughout a variety of theme parks where they could incorporate NFTs and do a lot with crypto and blockchain. It's wonderful that they've chosen Polygon. Mark Cuban personally invested in and supported the firm, and it's amazing to see Disney recognize the technical potential for Polygon and its network and what it can accomplish. Next, let's discuss what's happening with GameStop. Surprisingly, GameStop has seen its NFT marketplace launch in beta, and it has been performing pretty well in comparison to other launches. In just 48 hours ago, they had over $3.5 million in total volume, which is twice as much as Coinbase has in total. If you're a GameStop stock investor, this is a promising indicator. They are redefining themselves. They're really doing quite well, which is encouraging if you're interested in GameStop in their NFT marketplace. This is only the beginning, as they now have over 3,000 ETH in total volume, but this does not include any gaming NFTs, which is the path they have always discussed heading in the future. So, with just 50 NFT collections and a beta that was just launched, they're able to create this much traction and demand. That is something we would like to see for crypto and the NFT industry. It's wonderful to have all this positive news on various platforms right now. Now, let's talk about some major from the US SEC. So their chief Gary Gensler said that the public can benefit more if crypto platforms were able to offer even the most basic of disclosures. The SEC chief's latest commentary on the digital assets industry comes as the market battles an increasingly colder crypto winter that has hit a number of top platforms. On Wednesday, crypto lender Celsius Network joined Voyager Digital and Three Arrows Capital on the list of companies to file for bankruptcy. Leverage and ridiculously high yields plague these companies. Gensler says the rules that apply to stock brokerages and other traditional companies can also be tailored to fit the crypto space to help protect investors. So I think this is pretty good news, considering that the US SEC is finally starting to think about the betterment of crypto users. Coming back to Dogecoin, Doge holders can now use their crypto to pay for luxury yacht services. This comes as the use of cryptos increases in the yachting industry. Several top brokerage firms now accept crypto payments to buy and charter yachts. The most recent is Monaco-based Yatsu, which has collaborated with the crypto payment processor BitPay. But this is not all. As I've been saying, Dogecoin adoption has risen a lot this month alone. Dogecoin holders can now pay for Uber Eats food deliveries with their crypto via BitPay. Food delivery companies such as DoorDash and Grubhub, as well as takeout restaurants such as Grill, Chili's, Carrabba's Italian Grill, and many more are also accepting cryptos like Doge via BitPay. Now let's take a look at its price for a minute. So Dogecoin is up around 2 to 3% in the last 24 hours. As you all know, inflation has had an impact on crypto and stocks in general. And so, Dogecoin has been relatively stagnant because people are afraid for the overall economy and thus do not want to invest in Dogecoin. It is evident that most people don't understand the importance of Dogecoin and cryptos as a hedge against inflation because they only perceive it as means to earn money in the short term rather than an investment to make your portfolio more secure in the long run. People do not always associate crypto with safety, but this is changing. It will continue to expand. We do have significant names in the crypto sector who are bullish for this reason, because more and more people are starting to want to invest their money rather than hold it. And just like the housing market, when more and more people want to invest their money in cryptos, that is exactly when we'll observe cryptos doing exceptionally well, rising in value, and becoming a valued commodity. That's all for today's video. Let's see how the coming week goes. I'll see you in the next one.